Gold had a huge fall on Friday after NFP, and we were able to capture majority of it with this idea. I gave a 2473 level in advance that this could be a turning point for gold. So what we are going to do is actually see what actually happened and how we captured this entire move, and then we'll look into some of the scenarios, some of the levels which are going to be very useful in the coming days and coming weeks. So stay tuned. Hello and welcome back to this analysis of gold XAUUSD. My name is Vic. I'm the founder of Vikinsa Capital Management. Thanks for joining me here. So what we're going to do is start from higher time frame because we have just entered a new month of August 2024. So this is the monthly time frame chart in front of you, and I'm referring to XAUUSD on the feed. So please make sure that you are looking at the same feed on your charts, and I'm not looking at gold futures. This is CFD. This is on the feed. Now, so what we have so far is this is what has been happening. If you have been following my analysis previously, then you know that we are sitting at a multi-decade trend line like this. The market has gone above this. In fact, that trend line looks like this. The market has been struggling to go and become a bullish after this. So there has been a lot of struggle. The market fell down from here, created a doji at this particular place, and then this was supposed to be a bearish candle, or at least it was supposed to come down, but market showed in very good strength and it closed right there. Now, very tricky thing about this particular candle is this. Let me zoom in. So this is why you should read candlesticks, right? You should read the candlestick behaviors. I'm not very fan of candlestick patterns, right? Who cares about the names like those black crows and three widows and whatnot, right? But you should be able to read the candlestick behavior, because candlesticks are like telling you what's actually happening in the market, and who's in control, who has been in control. There is a storyline running behind candlesticks. So this is, if this looks like a bullish engulfing candle, right? Because it has been able to engulf this previous doji, which was previously a sign for bearishness. Why? Because the market was in uptrend, and if you get a doji on top of that, then you get a bearishness. However, that bearishness was cancelled by this doji, by this candle. Now this candle looks like an engulfing candle because it has closed above and it has been able to engulf the body of the previous one. However, it has not been able to close above the previous one. So that's the tricky part. See, this has not been able to go beyond this, and that is why the market may consolidate here for a bit. So what happened? The market wanted to go down, but now it just went up on Friday. So during the news, or there was in FMC or whatever, the market kept on going up. Then on NFP it fell down, but towards the end of the Friday it went up, because this is now an engulfing sort of not engulfing, but it is like an indecision sort of place now. So right now it is an indecision state, and this is what I said on the weekly time frame as well. If you remember, weekly candle said this was the bearish pin bar, which means that this week was going to be bearish, and that's exactly what has happened. Although this week has completed as as a doji candle, so we still need to see whether the market opens to the higher side or the downside, because right now, the way it is looking right now, this candlestick is an indecision pattern. I was expecting it to complete around here, but towards the end of the Friday it started to push up, and it closed nearly below this level here, below this support level here of the previous bullish candle, which means that it is slightly bearish, but this pattern is still kind of indecision candle. So we'll have to see how the market opens and how it actually works out in the current in the new week. This is what I was expecting. You see, we had a very good trade, pre-planned trade like this. If you remember, previously, so we had this complex W pattern, extended W pattern, and we looked for a short from this, and the market fell down. And after that, when the market went up, we went for a short once again, right? Why we were doing this is because of two reasons. One is that we had extended W pattern. When W pattern completes, the market falls, and that gave us this particular move, right? Which was very nice short. Then after this, the market created this this pin bar, this bearish pin bar after bullish candles, which meant that the market was supposed to be bearish for this week. That's why we preferred the short for this week, right? But how another tricky thing happened here, which I mentioned in the previous analysis last week, was that this candle was supposed to close somewhere around here, create a bigger bearish move, right? Because if it did, then it would have been much more bearish now. But towards the end of the week, it pushed higher and closed just below this support. So this created an indecision pattern. This is exactly what I said last time. So this was indecision pattern, which meant that we were supposed to wait and see whether market was going to go bullish or bearish, because indecision means nobody knows exactly what's going to happen on that time frame, right? So the market last week showed that it wanted to go up, but remember, so far it has still not been able to close above this. And this is what I also mentioned, that this level is now very, very important. This is going to be very important level for the market to show further bullishness. Now obviously this one, and then obviously like this high and this high, but this is the next major resistance or resistance level around here. So make sure that you watch this. So now, right now, the way it is looking like this is a bullish engulfing candle, right? Because it has been able to engulf this and engulf this, right? So which basically means that the market is still bullish here. We may get few short opportunities here and there, but again, you'll have to be very, very careful with them. Just get in and get out. And we had a very good short. Let me show you this. We had a very good short on Friday, and the reason behind this was because, as I mentioned in the previous analysis, that the market was creating a W pattern. Let me walk you through some of the scenarios, some of the things which actually happened. I gave you this 2 hour 200 moving average last time. 2 hour time frame, we have this 200 SMA as well, which is also 2401. You should watch that out. And remember how 200 SMA works. Like 4 hour 200 SMA supported this price. Even on 8 hour 200 SMA supported the price. So make sure that you, like, as part of your learning, use 200 SMA and gold trading. Okay. So from here, the market was supposed to fall, and it did. We were able to capitalize on that. That was beautiful trade. However, it never actually violated this particular low, which meant that the market was supposed to go higher. Then I presented this particular level as like in a potential reversal zone, right? This level. This was posted in the Telegram group. Telegram group is free, by the way. You are most welcome to join there, and I regularly post my ideas and my posts and my updates in there. So this is where I was expecting that market could be going down. Okay, but the market did not do that. In fact, it went higher, um, made this this area support, and then started to go up. And there, during this time, we were able to capitalize on some of the shorts. The reason behind this short was very simple. I presented that if the market violates this particular level, then it was supposed to go to create a W pattern, which was looking like this. This is that critical decision area, um, right here. This structure level is very, very important, because if it, it is acting as a neckline or something, then we have this in head and shoulders as well. Okay, and then we have this secondary shoulders as well. So these are all the things, and we have neckline here as well. So if the market breaks through it, then it is going to go further down. So these are very important coming in coming days or weeks. Now if I show you another bullish possibility, if that was more of a bearish possibility, but if I show you bullish possibility, then what can happen is that if the market breaks through this area, this particular area here, and it starts to challenge this, then what we can have is something like this, a bigger W pattern, which can also lead to all-time highs once more, or at least testing of this area, because the W pattern will be completed around there. So make sure that you go through all of the scenarios, but trade one level at a time, look at one level at a time. So this is very important, critical decision level. We need to see whether the market actually goes above, gives us a confirmation to go bullish, or it falls down, it goes slightly above, creates a fake breakout and falls down. So we'll have to see, because right now the way weekly has closed is a kind of indecision. So we'll have to wait and watch what is going on with the market. So when W pattern completes, the market falls down. So we took the short. We started preferring shorts. We took the day trades and we left little partial for swing trade, which were on break even. So even if they hit the stop loss, we were not losing anything, but we were capitalized on the day trades. So there was a very good trade here. There was very good trade here. Then the market started to go higher. This was done on FOMC. Now during this, you will notice what happened. They created liquidity zone, and I posted about this on Twitter. Um, on Friday that the market was supposed to target this, and there was a trend line liquidity. See, all of this is a made up move, which means that the market, if the market was going to go down because of this W pattern, then it was going to target this liquidity and this liquidity both, and that's why I was looking for this area. How do I get this? How did I get this 2473? This is based on my advanced FCP, which I'm working on at the moment. So this is going to be an advanced FCP course only for the XFCP students. By the way, if you are interested in joining FCP tuition, FCP course, or you want to learn my FCP methodology, this is the curriculum. You will find the link to this curriculum in your description of this video, or you can contact us on Telegram, or you can visit our website, vikinsa.com, and you may find there. This is basically a complete comprehensive tutorial which starts with absolute basics psychology. Then we start to read the market structures. We spend enough time. We have three classes there, reading the market structures, each and everything, how to read the trends, how what are impulses and corrections, what are the different kinds of patterns that most of the traders do. And then we dive into Fibonacci extensions, inversions, manipulations, how stop loss hunting happens, confluences. And then we also looked into trade management side of things, like stop loss, profit targets, entry levels, trade management. We also then talk about, after this we have completed this, we talked about W and M patterns, which you might have seen me talking about. I've just mentioned that W pattern. So this is where we do this. And then we have few other things just to add on to your analysis. These are nice to have things which can improve your analysis. And then towards the end of it, this is very important. We have entry methods. We have 5 confirmation techniques in our FCP methodology, where we see, okay, how do we find a confirmation to enter a trade? What is the best time to press a buy or sell in a trade, depending on my bias, depending on my analysis? So these are covered here. We also talk about position sizing, broker recommendations, and then I give you a roadmap to success, which is basically a 4 phase say a roadmap to success. So once the classes are over, I'm still there, talking to you on Telegram or Discord. But you need to follow this roadmap to success, which is basically multi-week, multi-phase program. Once you have covered that, then you are supposed to be ready for actual trading. So this is a very comprehensive program. If you're interested in joining this, you can send me a message or here on YouTube or other social media channels, or you can contact me on Telegram. You'll find the description, or you'll find the contact details in the description of this video. Anyway, let's come back to this. All right. So what we have done is actually come back to our daily time frame now, and this is what I posted on LinkedIn, just to get an idea of what people were talking about, what people what kind of opinion people had. So just a few hours ago, basically on Friday, I posted that, is gold showing a double top formation in the daily time frame? What are your thoughts? Because this looks like a double top. It is not confirmed yet, because according to the definition of a double top, it has to break through the lows of the previous. But in our FCB methodology, we do not look into double tops. We actually look for this W pattern here, and this is what I mentioned in the previous analysis. This is what I just mentioned before. And there you are most welcome to follow me on that on LinkedIn, because I post exclusive content there. My handle is Vikinsa. On Friday, this is what I posted on Twitter. So on Twitter, let me just see. Okay, this is the thread which I posted. I said, watch 2473 area closely, and this was posted on at around 8:57 a.m. London time, which was much ahead of obviously NFC, NFP, and whatever. And I also mentioned that you should watch this liquidity area, and this liquidity area was this equal lows here, which was around 2434. And as I mentioned before, this entire move was created just to have liquidity grab. There were two liquidity pools there, and that is why I looked into that. Now, what happened soon after that? As soon as NFP came, The market shot up. Where did it go? It went right into 2473, in exactly into 2473, and we were waiting for the market to come back down. This is the liquidity area, as you can clearly see, the equal lows. So that was the first liquidity pool which was targeted. This was all made up move, and I posted about this. I actually asked my followers, what did they see here. Majority of the people could not actually understand what I was talking about. The main thing was that the market was creating all of this just to engineer liquidity. Then we had this area which was also kind of liquidity, because as you can see, we have very bad candles here. So what my theory was, okay, if the market falls from 2473, we were going to target this as first area, because there was a gap available here. On as soon as the news hit, there was a gap. The market fell into that. That was target 1, this was target 2, and this was target 3, and all of these targets were completed. All of these were achieved. So the first target was this gap. Market fell exactly from 2473. 1 hour candle was not able to close beyond 2473, and soon after that, I was able to take a trade. And then um, this is how the target 1 was achieved. Okay, and then we nearly reached the second target, which was the liquidity pool here, right? The equal lows here. Okay, and then the market reached that as well. Equal lows were violated. All of those people who were bullish, because see, the reason behind this is very, very simple. For the last 1 week, everybody has been made to believe that the market is going to go up, market is going to go up, market is going to go up. And because of the economic data and whatever, they just keep on pumping the prices up. But it was reaching a level, it was also forming a W pattern, which means that the market was supposed to fall. So that is why I was favoring short positions. When everybody is thinking one way, you have to think other way, because that's how the markets work. They cause the maximum pain and maximum pleasure. That's what it is: maximum euphoria and maximum pain. That's the nature of markets. Okay, so soon after that, this happened. This is the liquidity, the second liquidity I was talking about. This is where I was targeting, right? Market target was 2411 approximately there. And soon after that, the market reached into that as well. So this was a brilliant trade, pre-planned. And the only reason, the biggest reason, was that there was a W pattern which I talked about, which I presented last time, and I was able to find this important level of 2473. These sort of levels, these sort of things are usually available in premium analysis report, which I generate. If you are interested in ordering a copy of premium analysis report on gold or any other market, you will find the information in the description of this video, or you can contact me on social media channels or Telegram, right? I'll be able to help you on that. Okay, by the way, I'm about to generate a new premium analysis report on gold. It's not decided yet, but most likely I'm going to do it over this weekend or in the coming days. And as soon as I'm done with that, I will be sending that to my subscribers. So this is what has happened so far. Now let's see what is possible, right? So let's come back to our daily time frame here. Now on daily time frame, this is actually, let's go to even smaller time frame. So as I mentioned that the market was falling down here. Let me go to 2 hour time frame. Okay, so this was the W pattern. The market started to fall down, and it went into right into this liquidity area, and then 200 moving average. I've already been posting about 200 moving average being a very important technical factor in your gold trading. If you put 200 moving average and just look at it on different time frames, you will see how it actually works beautifully. So my target was this 200 moving average, right exactly below this liquidity area, and that is how I found my target. And I've already talked about this, I've already posted about this in public media, public social channels. Now what has happened, the market fell down. Now there are few levels around here, which I will be updating in the premium analysis report, whenever that gets generated. But what is happening here is that market, if there are few scenarios that we should cover. Now trading is not about predicting, trading is about having scenarios, the plan. for bullish and bearish, because as like traders, we can make money on bear side, we can make money on bull side. We are not investors here. So what we should do is we should have scenarios for bear side and bull side both, and we should have important levels and zones which can act as support and resistance. And that's exactly what I present here, and that's exactly what I provide in premium analysis, right? Premium analysis has a lot more refiner levels and zones. Okay, so in terms of like a bearish move, what can happen if I go to 8 hour time frame or something like that, right? So if I look at, actually, if I look at the daily time frame, now on daily time frame, if the market starts to go down from here, see what is happening is that the market is creating a W pattern here. So far it has not been able to close above the previous high. Now I'm not looking at the bullish possibility as of now. This is like bearish scenario I'm explaining. We'll look into the bullish one in a second. So let's assume that the market never violates the previous high and it never closes beyond, and it continues to fall down. If it continues to fall down, then what can happen? The market may try to come to some of the levels here and try to push up. So we need to look at those levels, those important levels. But if it continues to go down, then obviously this midpoint, this particular point, is going to be obviously very important structure level, a very important support, because if the market violates this, then it will complete a bigger M pattern. As you can see all of these WNM patterns, they come in pairs. So when you have like one pattern, there will be another one. So this can happen, this is still a possibility, and it will bring us back down into this trend line support and few other factors, because right now you can see that this is nothing but a consolidation. This is kind of flag. So never say no, it may still do this, right? Because if it has been able to fall down from here, if it has been able to fall down from here, it can do that again. See, last time exactly similar sort of thing happened. The market created W pattern, it went above high, created extended W, but it fell down in steps to this bottom. Same thing can happen again. So you should be open to all the scenarios and trade one scenario and one level at a time. Okay, so that was the bearish higher time frame scenario. If I go to a smaller time frame, what is happening here is that market was trying to create a bearish engulfing candle on 12-hour time frame. So now this is bearish engulfing candle which has been able to close below the previous low, which means that it is still bearish. However, it has not been able to close below the previous low, which means that there can be consolidation or there can be movement to the upside, because the market is still bullish. So there can be movement to the upside. So if you are looking for a short position, then you should be very, very careful. Now, if I go to the 6 hour time frame, this is bearish engulfing candle. However, again, that trickery has been done. The market, towards the end of the Friday, the market closed above this previous support, which means that market is still bullish and it can try to go back up, right? So in case of bearish scenario, what can happen? The market may try to do something like this. Market may try to go up and then fall down. So if this happens, then this is going to be a bearish M pattern formation, and after that it can target this medium, this previous low. Okay, now these are all the bearish scenarios. Now let's look at the bullish scenario. In case of the bullish scenario, the market has already created this W pattern and it has already played out very nicely. However, if the market continues to go up and then violates this previous high, then obviously it is going to target the previous high, and then it can reach some of the extended levels here, which are also again going to be available in premium analysis report. Okay, but that is still a possibility. That bullish possibility is still there, and one of the reasons is this weekly time frame, sorry, this monthly time frame, because you see the market is still bullish, and this candle has closed above this previous high, and it is an engulfing candle, although it has not been able to close above the previous high. So this can be a confusing area. So trade one level at a time, one thing at a time. Obviously you're not trading weekly or monthly time frame, but that is just for information, because markets tend to run on the higher time frame levels and higher time frame structures. Okay, my personal bias will be that I will be looking at this particular W pattern formation possibly, and there are certain levels which I'm monitoring very very closely around here. And if the market gives me confirmation, I'll look for a short position. I will probably not hold that short position for a very long time, or I will enter the short position and I will leave part of that position running for a swing trade. I still have that position running from 2473, part of that position running from 2473. That's just my kind of trade management. I What I do is I enter a trade with some quantity, and then I take partial profits on a day trade, but I leave a part of that position on a break even or smaller profits, and I leave that for a swing trade. So I still have that swing trade position open from here. So this is what I'm looking at. I will only be bullish once the market has gone above this or gone beyond this, or there is a certain level around here. If that market actually goes above, then I will be looking for a bullish. At the moment, because the market is is still in W pattern, the structure has not been broken yet, and after W pattern usually comes an M pattern. That is why I'm still personal bias is still towards the bearish side. Okay, another reason which I mentioned before was like this, not this, sorry. Another reason is simply that we are running in this. So it's a consolidation. Market goes up, goes down, goes up, goes down, goes up. It can come down once again. So that is why my bias is still towards the bearish side, and there are only few conditions which, when we met, when completed, when satisfied, I will start looking into the bullish move. I will be trading bullish trades, but I will not hold them for a long period of time. So this is what I had on gold analysis. Hope you enjoyed this thorough analysis of XAU USD. If you hope you found this useful. If you did, please make sure that you share it with other traders and trading communities, because that helps a lot. Every time you click a like button or comment on this, it helps you actually helps us a lot. It motivates us a lot, to present this for free on social media channels and come and create this great content for you. So share it with other traders or trading communities, and I'll see you in the next one. Have a great trading week. Thank you for watching. Find and follow us on these social media channels.